Hey traders, Nick Shaheen here looking at GM, more so from a lesson on how I look at charts to determine whether or not, how to trade them actually over time. And for that, we're going to look at the chart from different time frames. So if you only look at charts from a daily perspective, you're missing a whole bunch of information. Chances are. Okay, so here we go. This is a daily chart, about a year's worth of data for GM. You can see it whipsaws back and forth. It's too violent for a stock that has set parameters. Okay, mind you, they went into a long strike this year. But nevertheless, the fundamentals don't change a lot. This is a cheap company. From an absolute perspective, 6 PE. This is a trailing PE, so it's actual results, not forward projections. And it sells less than 0.4 times sales. And it pays a dividend. So it's not too bloated, so to speak. There's not a lot of fat to trim off this. Okay, so I do have tons of lines for different time frames. So I want to pay attention to this line right here. This very line right here. I don't know if you can see it. I'm going to put a circle around it. This line right here. So this is 38 and change. I drew it months ago, obviously. I'm going to assume somewhere before May 13th. And usually when I draw a line, actually probably before May altogether, it's to denote a neckline that needs to hold. So probably on days like this, I say, you know what, they better hold this line, otherwise I see it falling. I had my reasons to draw it there, probably this and that, because it was a pivot point, and then it actually played out. As soon as they lost it, they overshot to the downside. They've done it before, several times in the 1 year. But the technicals play out. All right, so what can I discern from this chart? All right, so this is a daily chart. Every candle is 1 day. You have volume down here, but also you should start using volume profiles by taking this data, throwing it up sideways to match it up to price. So because, okay, this was a heavy volume day, this one, but where was it? So this tells you exactly where it was. So what does that mean? It means that most of the action was inside this range right here. So between almost 40 and almost 36. That's where the bulk of the action happened. And it had the most action exactly around 38.60 for this area. So it had another point of interest at 37-ish. But mathematically, this is where the buyers and sellers agreed the most, fought it out the hardest. So all this volume here, the busiest was that. Around when it was around 39, they were firing back and forth, buy, sell, buy, sell, buy, sell, buy, sell. So that gives me information. That's why when it's rallying, it hits it, and it's like a wall. They can't just slice through it. Here it is again. They hit it. They have to take a breather before they bust through it, and then they need to hold it. They did one time and then fell apart, and then fell apart at it again. So it's a pivot point. It's a conflict area. All right. So this is just one time frame. Now another piece of information I can gather is down here. So this was a strange dip and immediate refusal of it, and this wasn't coincidence. This was the bottom here, and so we have the Christmas crash, this whatever that is, the May correction, June correction, whatever you want to call it, and this one, the October correction. So higher lows, albeit tiny bit, but it's still progress versus a wall of resistance up top. So more information? Sure. Let's go to a weekly 5-year chart. So this is same chart, only now every candle is a week. So now you can see that same area. You can see I drew it for a reason. And I'll tell you the reason is, let me see here. Let me bring a scratch pad so we can mark it up. All right. The futures just reopened. By the way, it's 11:14 in the afternoon. All right, Thursday. This box, I was starting to talk. I drew it for a reason. This was the Christmas crash, whatever that is. higher low, kind of a deal. And then we decided that we have resistance above, and that was the line right here that I wanted to check out. And this is where we're at. That's the same blue line. So back to this line here. Why did I draw this box? I'm looking back, I'm trying to guess my point. Probably because this was a roof, and then they took it over, and then they defended it. So now that area becomes a pivot point. And I bet you this wasn't the first time. Case in point, it served as support during a huge, very tough test. I mean, the Christmas crash of 2018 was as serious a test as they get. Sentiment was super bad as I've seen it in a long time. Okay, so also I drew this box because it was resistance here, and then a pivot point, resistance here, and then a pivot here. What do I mean by a pivot? They hit resistance and then they broke out of it. You can argue that the breakout was down here to somewhere down here, and then they overshot. Then they tried to use it as support. They kind of succeeded, and then they let loose. All right, so now we know a little bit more about this box, and now we found out that we have another box, because this is 5 years worth of data now. And this, again, the line I was looking at. Let me see, if I go back, you can see it came in play several times before. So it's an important line. I bet you we can find more information on a different time frame. 1 month. So now we're looking at the new GM after Government Motors. 2011 on. Remember, they went into bankruptcy of sorts. So this is garbage. These are the two boxes. And if you can see, except for extreme, the bulk of it is inside. And in fact, this is the same profile, only on a different time frame. And this adjusts based on the time period I show. Like if I wanted to zoom in, it'll change. Okay, so but let's keep the whole thing so we keep it intact. So it tells me that most of these volume bars, this is 1 month per tick, per candle. Most of these volume bars happened between this and that. So now, and then within that, the peak of activity is just above 34. Let's call it 35. So this is the point of control, this zone right here. So we have support below current price. That's what I can glean from this. So given the whole time period here, this has been busy. So if they're falling, they're going to be fighting it out again. On top of it, I have this box and this candle and this candle. So these are tails. So during that month, they tried to sell it down, but they rejected it and closed way back up. During this month, they tried to sell it down all the way to here. They rejected it and they closed off the lows. They closed at the highs. So in theory, if I'm looking at this company, which doesn't have a lot of fat on it, because that's what we looked at in the beginning, now has support below it. So on bad days, I'm not panicking out of it because of that. That's just the fundamental look at it with some technical aspects to it. So let's go back inside to see if there's any information short term that I can trade. So for the more active trader, there's information here. Now we went to a 2-hour candle. So we're zooming into shorter time periods versus the one we started out with. Nasty, right? I don't remember what that was about. I'm sure there was a reason for it, some headline, some bogus headline. So here's an area of interest. Why? Because there was a consolidation period zone where they fought it out, and it's the edge of the value area. See, this changes now because we zoomed in. This, in fact, was the point of control. Coincidence? I don't know. Coincidence? I don't know. This is a ledge area. So they're slicing through it a little faster than I like. But there's this zone. So if I didn't get out of it, I'd see what happens through 36 and even 35 and a half. There's an open gap here. They may be after it. I'm not sure. But it's not easy to get out of the value area and just keep running lower. And we are approaching the value area. I'm trying to eyeball it here. So depends on how much pain I can take. Another 50 cents, 60 cents, another $1. Depends. I remember going long when it fell off a cliff. I sold puts into it, and they were easy trades. So in this case, I don't have an exact figure where I say, okay, this is where I'd get out. But if I was trading, I'd probably put a stop below this or a stop below that. Depends on personal preference and risk appetite, I should say. So let's include Fibonacci. I'm not a Fibonacci connoisseur, but I do play one on TV. So here's Fibonacci. So we have that extension running up. The 50% retracement of this rally is 36 and change. So maybe they're eyeballing that. It happens a lot. Let's test that theory. So this is the level from which they fell, right? Where's the 50%? Right here. Look at that. This is the 50%. So they fell this much. They rallied back halfway, tripped, got back to it, tripped, and now it looks like a cup and handle, inverse head and shoulders, depends on how you want to draw it. And then they busted through it, and now they're coming back to it. So again, I won't be panicking out of it. Now, the only caveat is that markets are at all-time highs, so they're vulnerable as it is. So if the market's actually correct, this one's not going to rally. So it's going to take pain with the rest of them. But I wouldn't get out of it. So this, again, is not a trade advice on GM. It's just a good look at GM, but a better example on how to approach a stock from different time frames. Can I get more granular? Sure, I can. I can get to a 30-minute chart, but it all depends on how fast a trade you are. So if I'm looking to chase it up and I don't want to jump the gun and grab it and then it fall, I'd wait for it to break above 37.5, for example. Even better yet, 37.6. It all depends on the time frame. Here's a 5-minute chart. Lower highs, lower lows. I wouldn't chase it until I see a bottoming process. What does that mean? A clear trough, which means at least a double bottom, which I haven't seen. Every bottom is set lower and lower and lower. Maybe this one kind of looks like one. But then again, the second portion of it is to start seeing higher. You want the pinch to happen, lower highs, and then stop making lower lows to come into a pinch and make a U, and then you start seeing making higher highs and start climbing up and higher lows, hopefully. So not jumping the gun. Daily gives information, but it's an incomplete picture. Always change time frames.